broadly speaking, today is a double whammy because we had messy data on the economic front. And I'll add to that you have next week as well, where you have that 1-2 punch of labor market data and inflation data at a time where the labor market alternative data is kind of mixed. So you have the macro story coupled with that AI concern in the software space. I will say at these levels, there are some places that are getting pretty screaming cheap. And the reason why I say that is because if you look on a relative strength perspective, you are looking at the median software company in the software index of the S&P 500 trading at the lowest levels or is trading at the lowest RSI in at least a decade. You're looking at price to earnings on a forward basis coming in kind of the worst it's been since COVID and 2022. And certainly this is neither. And so when you look at the moment that we're in, we do have clients at this point in time looking to seek exposure to single name stocks within software that are downside protected, looking to try to see through the noise, though we do believe you could expect more volatility, maybe things to even get a little worse before they get better, but we do see it getting better. Let me give you the characteristics of companies, again, ones that are incumbents with scale, but also areas like data lakes. Some companies are still private, and so the IPO window gets really interesting this year. That's one reason why our clients like venture. A lot of people are talking about the sell-off that we're seeing in private capital. We think it's very, very overblown. One thing that you can calculate, just kind of back of the envelope math, if you look at the biggest firms in terms of the estimated assets that are tied to the software space for, say, a Blue Owl or an Ares, for example, you have less than 2% of their management fees exposed to this industry. So with that said, with an IPO market coming back, with the relative health of the economy that you're seeing in terms of growth and general resilience in the labor market, at least a stabilization in the areas that would matter to underwriting, the sell-off is overstated and sentiment driven. Now, what is the entry point? That's the question, given where sentiment is now. But, it is true here that when you look across many aspects of the market, whether it's in the pure play technology or whether it's in the financing of that technology, that certainly a lot has sold off to levels that are not consistent with fundamentals.